Good afternoon, ladies and gentlemen. This is Parag Kapdi here with a video on AUS200 or the XJO. Yeah, I'll be using the AUS200 chart. It represents the XJO, which is this is what we trade on all our platforms. So this closed at 7365.93. On your platform it could have closed a couple of points here or there, but you still get the gist of it. Not all platforms give you the same output, so just use 7365, which was the close on FXCM, and if yours was say 2 point higher or 2 point lower, so everything that I talk about, you know what error or discrepancy can be seen in your trading platform, right? So most of you know me as the guy who posts mostly on the AUS200 every day before the market opens, and I just do it for that single day as to what I see could be the high or the low, and whether it's not it's never a trading call or anything. It's just more about I just put my thoughts on a tweet, just so that I can know whether I was right or wrong. So putting it out on a public platform makes me do my research a bit more stringently, and I've had some good results. Yeah, on most of the days I am off by say probably 1 or 2 points here or there. So on a 50-60 point moving instrument, being off by 1 or 2 points tells me that my analysis was quite good. So that way, but this time I'm doing a video on it simply because I saw something which I thought, okay, let me just do a in-depth analysis rather than just a short video, sorry, a short tweet or something, because there are a few things which I wanted to share. Yeah, so this is not any kind of trading call for you guys or anything. Yeah, it's just more about my rambling. So please do not act on it. Yeah, it is just a purely educational video, so no financial advice given and none should be taken. Yeah, I'm not a financial advisor. So we saw the highs of 7650 last month, same time. Yeah, 12th August was the high, and we closed on 10th of September at 7365, making a low of 7338. So we lost 307 points, which is equivalent to 4% of drop from the high. So as we all know, since COVID, we have not had a single 10% kind of fall, and every time the market has been shaky, the BTFD crowd has come in and started buying, and we have not had any sizable correction. The biggest correction that we have had was somewhere in June 2020 and September 2020, right? So that was a long time ago, where we had a fall of 7.9% and 7.8%. So let's say roughly 8%, right? So as of now, we are 4% done. So we have not even fallen half of what we have fallen in the past. So let's see how does 8% look on the chart. Let me just draw it again, that will be better. So this was the high, and if we say we drop 8% from here, which was the maximum, right? We have not fallen. Let's put it at what it was last time, say 7.85. So that gives us a 600 point fall from the high of 7650. So it comes down to around 7050. That is, if we fall like these 2 times out here, which was the largest. If not, we have had some smaller falls out here. So if this is the maximum that we have seen us falling before the as they say, the printer turns on, or whatever you want to use for that. If we do that, that brings us right in the middle of this sideways consolidation out here, right? So that consolidation can provide support out here. Or if we don't fall as much, right, if we don't fall as much, we can come somewhere around somewhere around this level out here, yeah, which was the sideways consolidation, the last sideways consolidation. So this was from June and July, right? So somewhere around here. So we come somewhere around here and support kicks in. So that is around 7,300. So a total fall of 350 points from here. So not a big fall, yeah, but just a standard running correction, right? Like as we say in a bull market, the corrections are sharp and shallow, sharp and for a very short duration. So for a few days the market falls and it loses say 5%, 6%, and then again it starts kicking up. So let's see whether the support comes in around this level, around 7,300, yeah, which is just 65 points away, or let's just put in the moving average and see which moving average has provided some decent support, right? So let's put it in there. The green line is the 50-day EMA. Let me delete this box, not required. And this is our 200. We have not disturbed the 200-day EMA since the day we crossed about it convincingly post-COVID, yeah. So we have just disturbed the 50-day EMA once, where we had 3 days worth of close out here, right, and 3 or 4 days worth of closing on a closing basis, and then it was all back on the upswing. Here 1 day close, another 1 day close. So today, this time we have had 2 days worth of closing below the 50-day EMA. So even if we start recovering small on Monday and Tuesday, then we have got around few points to cover now. Let's just put in where would I be happy to see, so that any recovery I want to see a close above 74.50ish, yeah, something around 74.50 on the daily, yeah. If we close above this level anytime this week, yeah, I'll think okay, our correction has probably is done, right? So either we go down below 7,300, around 7,300 and recover, or we start recovering straight up from tomorrow, yeah. Monday morning we start recovering, and by say Tuesday, Wednesday, we close above 74.50, then we can say okay, this fall has been done. But the only reason I am doing this video is I just wanted to show you something else, right? Something else which I saw, which is quite different this time, right? And which is, let me delete this, not required now. This is not required. So just note 74.50 on a closing basis on the daily is good enough for us to arrest this fall, yeah? What I'm interested is I'm just putting in the RSI out here, standard RSI out of the box, no tweaking, nothing, yeah. 14 period, and the RSI is showing us 34.40 as the closing level on the closing of Friday night. So again, I'm not trying to look at RSI from that standard 70-30 where above 70 is overbought and below 30 is oversold. No, that's not the point of this. What I'm trying to show you is that whenever we had this big falls, yeah, of 7 or 8%, our RSI has still managed to remain above 35, yeah. This is the first time we have, let me move this is my handle on Twitter. So this RSI has never been this low post COVID, yeah. and this tells me a loss of momentum, which is the bigger alarm rather than the number of where we have dropped and what we are doing. Uh, so let's see what it drops down to if it recovers. Yeah, as of now, I've seen most of the longer term corrections which start and which develop into, say, a distribution kind of a pattern. The RSI at at that time when it dips below the lowest of the low, yeah, on the uptrend, is a very good indicator. So this is the first time we have gone below. That is why I'm a bit worried. Yeah. So all those who have done my workshops will know how I use RSI or the MACD. It's not the conventional way of how I use those indicators. So you can keep an eye on this, and if the recovery does not come, we can then start worrying about it, right? Or what we can do is convert this into, say, a monthly chart, right? Let's convert into a monthly. Let me delete everything not required. Let me just put it out. Not required. Not required. Okay. We don't need the EMAs. Okay. So what do we see out here? These are the two falls that we talked about, right? So even when we were falling this was in June, this was post COVID, yeah, just 2 or 3 months after that, and we had fantastic recovery on a monthly basis. Yeah, we were still way above the big breakout level that we saw out here, right? So the monthly candle never closed below this bigger candle out here. This time, if we don't recover in this month, we may even clear this level out here, which was the 2 month close. Yeah, so around this level, yeah, 71.71, or we'll close below this level, which is quite near, around 7100. Yeah, 7100. So we will be disturbing this chart with a bigger, like we'll be taking out 3 or 4 months worth of green candle in just one single month, and that will be something to keep an eye on, right, on the monthly basis. So let's see how this goes. Yeah, or let's go back to the daily. How I would actually like to see is, as I said, when we are falling, uh, I want to see that 7.5% of a fall done. Yeah, that way we know that it's the standard fall of around 7.5, 7.8, which we had out here. We have had a similar fall and then back off, then again this recovery. So all the steam, we let off all the steam. Yeah, or probably a bit more sideways consolidation out here with, and then a recovery. So from a timing perspective, this week I consider it to be, say, starting tomorrow from the 13th till the 17th is very critical, right? So if tomorrow Monday morning the US market opens with a gap down and of even, say, 6 or 7 points on the ES or the SPX 500 that we trade, and that small gap also does not get closed during our trading time, yeah, then yeah, it should be a bit of a worry. Then I expect the next 2 to 3 days worth of this fall continue, and any decision will be then taken on the 17th of September. Like any recovery will then get delayed all the way up to Friday 17th. Yeah, so that from a date perspective, I would keep that point, that line, yeah, on 17th September out here as my, like, a very important date. So any low that I see out here, yeah, should be like, if we keep falling, yeah, then that would be the low of this big fall, and then any recovery can come from 20th of September. So keep these dates in mind, keep those levels that I gave you on the EMA side. Yeah, again, this is not any financial advice, this is what I'm just talking from my experience. Yeah, maybe nothing, maybe something, right? So better to be aware than to be taken off guard. Yeah, so hope this analysis helps you. If you've been watching this long video, yeah, thanks for watching, and any comments, please feel free. I'll try and answer to the best of my knowledge. And yeah, let's see how whether this was whether this video was required or not. We'll come to know tomorrow itself, whether we'll keep falling or what happens. Yeah, so thank you guys. See you next time with another video. Bye bye.